Hi, can you hear me?
Yes.
Wait.
Yes, your voice is loud and clear.
Not very clear?
It's clear, but it's breaking
Okay,
in between.
give me a minute.
Yes.
Okay, give me a minute. Hi, Vivek. Can you hear me now?
Yes, it's much clear now. Okay. Just give us one more minute. We'll start, Mr. Satya.
Sure.
Members are still joining. Yes. Ajay, shall we start? We have 77 members already, and I think we can start. Ajay, you are on mute.
Yeah, go ahead.
Okay, thank you. Good evening to all members, guests, and to the eminent speakers of today's event. Welcome to the first technical event of Bahrain chapter of ICI for the year 2021. My name is Vivek Gupta, your host for the evening. For those who don't know me, I'm a proud member of BCICI and a committed member to the executive committee of BCICI. It's been said, life can only be understood backwards, but it must be lived forward. Going by the statement this time, but the Bahrain chapter has brought you an event where we'll learn about the changes in regulatory landscapes for NRIs in the past and understand the very important aspects of the future of banking, globally and in Bahrain. And today's event holds a Pandora box for you, which will present to you Kahoot quiz, guest speakers, and various aspects where we can learn and improve ourselves. But before taking the lead towards the session, please welcome versatile chairperson of BCICI, CA Ajay Kumar Chetuvatti, to address all our dear participants. Ajay, over to you.
Good evening, everybody, and to everyone on this seminar. A very happy New Year, first of all. So, are we happy that 2020 has ended, or blame it for disrupting our way of life? You know, be thankful. I don't know this only time will tell, but in our common theme, if I were to log into the future, I believe the second one will hold true, because as 2020 has helped humanity to realize a number of important lessons and changing our way of life and remaining a resilient uh, together within the face of adversity, and also the giant leaps that in some of the areas like technology and medicine and other innovation that we have done during the year. Now, coming to 2021, I think everyone is looking forward to this year with a lot of enthusiasm and optimism. We at BCICI, we are also no different. I know many of our members have already taken the vaccine, and many more are registered to do so, including me. So hopefully this will be the beginning of the normalization that we are all looking forward to. Therefore, we have decided that for the month of January, the theme will be called a new beginning. I think everybody is looking forward to a new beginning, and this is what we want to do. So we thought the new something new or something new side. So and for session as Vivek, we are very happy to have a host of very learned speakers and covering two very important. So as you know, banking is a financial center with a very wide banking in order to
Ajay, you're there? Ajay, your voice is not clear. Seems Ajay is not there, so everyone just give me a minute. Let me reconnect Ajay. Seems the glitches from 2020 are still following us.
This technology, yeah, it's okay. I don't know. I don't know where I lost you, at which point. But then, anyways, I think I was just trying to welcome the speakers for today. I think we will have first Mr. Satya Mohapatra, the Senior Vice President of Barclays Investment Bank, and is an expert in this field, and a very seasoned speaker as well. So we are very grateful to have him, speak to our members. So thank you, Mr. Satya, for joining for speaking to our members today, and to give a unique perspective in relation to Bahrain on this topic, and give an overview of what Bahrain is gearing up to do in the near future. We have Mr. Prashant Govil, financial sector specialist from the Central Bank of Bahrain. He's a very familiar person for BCICI and a long-time supporter of our activities. So thank you, Prashant, for joining us today. And the second interesting session is more based on the Indian regulatory landscape and as applicable to the NRIs. I think something that most of us will be concerned with. So for that, I think we have very two senior fellow chartered accountants, CA Jay Kumar Tejwani and CA Bhupendra Mantri. So they are very regular contributors to various CA ICI initiatives and activities, as well as they have spoken extensively on many technical events. So I'm eagerly looking forward to that session as well. And yet again, I want to welcome you all to today's session on these two interesting topics. And I'd like to thank all of you for your attendance today. I think as again, we probably are hitting the 100 number. I think we have already crossed the 107 number. So I'm extremely grateful to all of you for keeping the numbers such at high levels. And like you, I'm also very eagerly looking forward to hearing from the experts today. So I will not hold up any further. With that, I'll probably hand back the control to CA Vivek. Thank you.
Thank you, Ajay. Thank you so much. In spite of that short glitch, you managed to brief us what we all must be expecting in the year 2020. And you already really gave a really good brief of what we are expecting from today's event. So let me take you forward. There's a very famous quote by Bill Gates. The world needs banking, but it does not need banks. And with advent of artificial intelligence and machine learning, it is not far that what we are anticipating for our future will become our present. With this, moving right along, it is my pleasure to introduce our first speaker, as mentioned by Ajay, for our first session for the today's evening on the future of banking. Mr. Satya S. Mahapatra, Senior Vice President of Barclays Investment Bank. He is currently handling responsibilities in respect of risk and analytics in Barclays and Barclays Incubation Center, NRIs. He has been a speaker at Confederation of Indian Industry, CRO Summit, and BFSI Game Changer CXO Summit. The list of laurels doesn't end here. So now I present you the first speaker for today's event, Mr. Satya S. Mahapatra. Mr. Satya, over to you.
Thanks, Vivek. Thanks, Ajay, for inviting me. Happy to address Bahrain and in the virtual world. So I think these are some of the good things of 2020. We can listen to, we can be part of the virtual summit of anywhere globally. And so a lot of learnings we can share. So I will straight away jump into the session. So I handle risk and analytics for Barclays, and also am part of the Barclays Incubation Center called Barclays Rise, where we work with various startups in the space of payment, risk, blockchain. So some of the experiences I'm going to share with you. So how we perceive the future, because future nobody knows how it is going to be, but we have scenarios. How do we perceive the future? And also I will share some of the startups which we have worked with, and some of the use cases, potential collaborations, how we can learn from each other. I think Bahrain is also a country of innovation. So Middle East, I'm seeing Bahrain and Dubai, so they are moving quite far ahead compared to the rest, and so a lot of good things are happening. So let me start sharing my screen. Okay. So I will share my presentation through Ajay and Vivek. So this is my LinkedIn profile, and also you can reach out to me in my Gmail or my official ID if you have any further queries or anything you want to discuss. Okay, so we will cover potential future scenarios, top challenges and investment priorities for bank, impact on banking landscape, and use case, because we want to be more practical, want to share examples, and also we'll add some videos also so that it is not very boring. So also you can listen to the videos, and also we will discuss on the EU guidelines for trustworthy EI, so which is quite essential. Because what are the key things, and EU guidelines are quite stringent, and how those, if you are designing any AI or ML system, so these are the basic 7 things which should satisfy, and some of the startups which we are working with. So that's the agenda. Okay, so this encompasses the banking scenarios, the future scenarios. So where we are so I will go one by one. I will touch upon some of the scenarios, and also I will share my experiences, my examples. So before that, I will ask you a question. How much time does it take to blink your eye? Anyone? How much time does it take to blink your eye?
2 microseconds.
Fraction of a second.
Ajay is quite fast. Ajay, I think he has superpower, but I'm talking about normal human being. How much time does it take?
0.5 second.
0.5 seconds. So you are talking about 500 not 0.5 second, still less than that. Okay, so it is around 300 to 500 millisecond on an average we take to blink our eye. I mean, it's the blinking action itself. And how much time does the HFT or the high frequency trading nowadays uh, need to execute the order? Typically, how much time do they take? It's in the order of microseconds. So that shows the magnitude. So it is around 10 to 15 microseconds. If you are working on a high frequency infrastructure in Hong Kong or Tokyo Stock Exchange or New York Stock Exchange or even in India, so it is around 10 to 80 microseconds. So that shows it is impossible for humans to trade in some areas. We can't even trade in the electronic trading. So electronic trading constitutes around 50 to 60% of the volumes currently for NIC, and it is increasing day by day. So that we are thinking of trading without traders. So I will give you an example. So I was part of the algo trading platform development for Credit Suisse, and so I joined them in 2007. So there were around 100 traders in the floor, and they were supported by around 30 to 40 IT and quants. But so then we had a crisis, and in 2012 the scenario was different. So there were only 20 traders supported by around 70 to 80 algos, automated algos, and supported by around 20 to 30 quants. So you can see we cannot eliminate totally the traders, but the mix will change. Mix has already changed.
ওইটাতে করতে পারছি না কম্পিউটারে
So
আমার ওইটা দাও না একটুখানি হাফ
Request everyone to
yeah,
go on
so
mute, please. Yeah, thank you.
so we can see that, so that changed. So the whole thing, so at Credit Suisse we can see only that time vast algos replace the traders in most of the functions. We cannot eliminate because still they need to review the algos, they need to change the modify the algos, so that way. And so this is one thing. Service without branches, we can see that slowly banks are moving towards digibank, and the famous model is the Marcus Bank model by Goldman Sachs. So GS didn't have any branches in UK, and it launched a lending product, a no frills product for some of the customers, and gradually it went into wealth management, lending, and that has become a unique model for other banks. Now everybody is trying to move into those, like JP Morgan is also trying to go into that UK market, where it didn't have any presence in the retail segment. So you can see how banks are moving, crossing boundaries. So it can happen in Bahrain also. So like some of the banks in Middle East, they can have, with a big bank, they can set up a digibank in Bahrain and without any branches. So those kind of things are becoming more and more here. Investing without managers. So earlier there were, for every we had a lot of RMs, relationship managers in the wealth management space, supported by analysts and other people. Now there'll be only one or two RMs supported by multiple programs, or called advisors, portfolio algo advisors we call them, and they are going to support it. So it will be like the investor can himself look out the various scenarios. It's already happening. So already the RMs like Credit Suisse or UBS, so they're digibanking, the wealth management practice. So they're arming those RMs with the various portfolio analytics, and they are themselves giving it to the clients. So where they're analyzing, they're seeing the various scenarios, and then they coming back to the RMs that where I want to it. So that's where we can see there. Security without privacy. So this is a very important topic. We you can see that people were quite concerned, like WhatsApp is sharing the data with Facebook. So blockchain solutions are coming up with kind of thing where we'll see a demo if we have a time, how this we can go for need to know information, and where customer is the stewardship for the various data which they have. So, and we can go through the various use cases. So this is just to show some of the use cases which we have. As we progress further, I will go through it one by one. And you can see what are the potential future scenarios near to medium term. So one is the open banking. So that is happening more and more, where we expose our APIs. So Barclays, we have a fintech center where we expose the APIs to various startups, and the startups work with us on various like risk scoring models or the fraud detection models, where we give them only not all the data, only where uh, what is needed for those models, and then they will give us back the results output. So these are becoming more and more important, where the banks are partnering with fintech on this. Future of operations. So lot of banking operations, other operations are moving towards cloud. I will not say public cloud, it is mostly in-premise cloud, so that the security, we are still concerned about the security, but cloud gives us two advantage. We can scale up quite fast, especially physical servers compared to the physical servers. And also it gives us computing speed. We can leverage the cloud servers for complex computing. So that is becoming more and more important. But to address security, so most of the banks, unless it is sensitive data, so it's mostly in-premise cloud. So that's the model people are following. And operations will become as a service. So like it's like risk as a service or operations as a service. So like small banks may not have that infrastructure to um, uh, make big scoring models or the complex models. So for this, they can have specialized fintechs, which we will supply them those know-how. So similarly, it can be in the risk, it can be in settlement operations, it can be in the payment operations. These operations as a service will become more and more important. RPS, we will see how RPS are impacting the reporting and the other banking functions and efficiency. New world of payment, trade finance. So there where the blockchain has a big impact. So that also we'll see. And algos we have already discussed. And marketplace lending, wealth management. So those things will become increasingly move to the marketplace for that. So I will just take a break and I will just show you a open banking use case video from Barclays. Can you see?
Yes, it's visible.
Okay. Can you hear the sound also?
Not yet, Satya. The voice is not audible of this video.
Okay, the voice you're not able to hear?
No.
Okay, 1 minute. Can you hear now?
Yeah.
Yes, it's audible now. Thank you so
My
much.
name is Anisha Thapa. I am an intelligence analyst at CB Insights, which is a tech market intelligence platform that provides data and research on big tech, tech startups, and venture capital. Technology is really changing the way consumers and companies like application programming interfaces or APIs help fintech startups to connect to a bank's platform. Open banking is really driving financial inclusion through two ways. One, access to credit, and two, called Credit Kudos, for example, that leverages open banking, uses consumers and builds a credit scorecard for consumers that they sell to UK lenders. So what they're trying to do is provide a credit score to those that previously weren't able to attain a credit score. Also in the UK, we have a company called Tully, which also leverages open banking and APIs to connect to a consumer's bank statement and then provide needs and then really try to deliver products to them that enable them to save more and create a better debt repayment schedule. Financial inclusion is being driven differently in emerging markets versus developed markets. In emerging markets, it's being adopted through digital identity solutions, through mobile payment solutions, and through cryptocurrency solutions. For example, in India, there are government-initiated programs like Aadhaar Pay, which then advances biometric identity payment systems, which then enables consumers to open bank accounts. Through mobile payment solutions, we're seeing things a bit differently. There's 1 billion active mobile money users in the world, and the phone is becoming a multifunctional device to accept payments and to also make payments. So with that, we're seeing a lot of QR code payments in emerging markets. PayPal, for example, just launched a QR code payments feature in 28 markets. And then, transitioning to the developed market, companies and startups are driving financial inclusion very differently. It's mainly through, acquiring more customers, serving the unbanked SMB market, and then also partnering with banks, where banks are transitioning to different business models such as banking as a service. So, for example, in the UK, Revolut started off as this low-fee debit card in 2015, and now has expanded to 10 million customers, and basically has a range of products, from investing to cryptocurrency to insurance. They really want to become the digital bank of the future. And then in the UK, for example, we have a company called Iwaka, which is an SMB lender, and they just recently launched an open lending platform that enables all the stakeholders, the digital banks, the accounting software platforms, all to come onto one platform, collaborate with each other to really find the best customized, personalized loan for unbanked SMBs. Fintechs in developed markets are moving from single-line businesses to multi-line businesses. They are rebundling products and services and borrowing from the same product playbooks. For example, Robinhood started off as a digital brokerage investing platform and has since moved into cryptocurrency and banking. You can trade crypto on Robinhood these days, and you can leverage their cash management account, which is a hybrid between a brokerage account and a checking and savings account. Another example is SoFi. They started off as a student lending platform, helping students refinance their loans. And now you can leverage their investing platform through SoFi Invest. And they also provide banking features.
Okay. So the key thing is, so fintech has moved into the phase two. So where earlier they were focused on one product line, but now they are moving into multiple product lines. As you can see, Revolut or the Robinhood or Marcus from GS. So so earlier, so because of tech, so you can see, I will just will go further. So I'll just quickly go through this slide. 90% of executives believe that each of these priorities are important. Only 20% of executives feel very prepared to address them. Hmm. This slide is slightly less, but we can see that it's a typical like uh, regulatory compliance, enhancing customer service, but because of the underlying infrastructure
Hmm?
or
Mr.
skill
Satya, your
sets
voice is
or the
breaking in between.
Why?
I'll stop my video and
Tell her to put off 1 minute.
can you hear me now? Can you hear me?
Yes, now it's audible.
Hmm?
Okay.
Yes.
Okay.
It's still not audible, Mr. Satya.
I think he's got disconnected. No?
Yes.
Technology.
The glitches keeps on following, Ajay. So 2021, we
Okay, I
can't
think he's
expect
back.
everything. Yes.
I can
Yes.
see him now. Yeah.
Okay. So let me share my screen.
Yes, please.
Okay. So I'll quickly go through what's the banking landscape. So 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 we are seeing for these things we have to adapt the regulatory environment like Basel 3, Basel 4, the new regulations which are coming up, the capital requirements, the stringent reporting requirements. So that has an impact on the banks. So for that we have to adapt. Also like the fiscal pressures, because of the COVID situation, you can see this creates fiscal pressures for all the countries. And also we have, you can see that uh, different things. So what are the key drivers? We can see like demographic change. So these are the key drivers. We have to plan for demographic change, especially the millennials, which are quite neglected. So which we think banks like Vivek said, uh, uh, we need we need banking as a service, not the banks. So that is what millennials now need. The functions, the service. So they want conveniently, fast, and on the tips of the finger. So it's like how many of us go to a branch probably once uh, so it's now like once in a quarter. Earlier it was like once a month, now it's once a quarter. How many of us do internet banking? So it like 3 or 4 times a month or 5 6 times. How many of us do mobile banking? Almost every day. So you can see that that's how the frequency is changing. And also because of the mobile, so there is a more focus on instant service, instant credit, instant loan, and quicker things. So you can see population growth discrepancies, aging population. We have to address both millennial and the aging. So aging population, they have different needs. So that also we can't, or we have to think of a different model for them. Tech change, disrupting technologies like blockchain, which can have a big impact on the remittances. So blockchain, you can see that a lot of, I think Gulf contributes the biggest remittances to India. So those things will be impacted. Um, and social and behavioral change, urbanization, global affluence, uh, changing behaviors like social media. So those things are becoming more and more important. Rise and interconnectivity of the emerging markets. So global, so the we can see the APAC markets are becoming more and more important. APAC and the Middle East markets. So more and more trade, economic strength, resource allocation, population. So those markets are becoming more and more important. So that's why the banks are also trying to focus. Global banks are trying to focus more and more on the emerging markets. Also we can see rise of state directed capitalism, like we have the country wealth funds, development banks focus on state intervention, like if there any crisis. So those are the things we are thing. The last point is important: war for natural resources. So that's why ESG, environment social governance, has become a big important thing for the banks. So as part of that, we all the banks, we have green agenda where we have to reduce the carbon emissions. So as part of that, also I'm working with World Bank from Barclays, like to work on a, we are trying to build a green securitized product. So like we already have securitized products, but we are just trying to do uh, for green, to classify them, do a the green impact, whether it's based on the ESG parameters, whether it's green, and try to sell off to the investors. So as I said, so earlier we had fintechs based on need one, or the banks. There were different departments which would focus on need one, need two, need three, and the whole army of product channels, risk, operations, and system applications were built on this thing. But now, as you can see, so it's totally solution integrated, and need one, need two, need three. So as you can see, the fintechs can move from one solution to another solution quickly, because the underlying infrastructure, they are um, they are common. So let me give you an example, probably that will help you, like market credit and operations risk. So like Barclays, we have a big data cluster. So we have a data lake, we call it, which caters to the whole IB. So there are 2 to 3 data lakes which caters to the whole IB. And then for earlier, we had separate systems for market risk, credit risk, and operations risk, finance, and treasury. But now we have one single big data cluster for the whole thing. And for a customized view, we have data marts on top of it. So you can see that makes it possible for to have a unified view, especially the cross risk, and it eliminates the reconciliations also between the product control and the um, product control and the risk functions and compliance functions. So those kind of things are becoming more and more important. So that results in integrated compliance. So earlier, the compliance was for every department, we have just separate compliance, but now it is becoming more and more integrated. And operations, that also enables operations to be shared across. Like equities used to have a separate operations, credit used to have a separate operations, rates used to have a separate operations. Now it is possible to have a shared operations, at least from the back office, settlements, payments, or the middle office point of view. Okay. So we will see some of the use cases of AI and ML in trading and operations. So we'll see one example of brain and arm architecture in algorithmic and low latency trading. So I will just briefly go to the architecture. So this I have taken from TIPCO, but since I was So we designed a brain and arm architecture for Credit Suisse for the whole APAC market. So brain will decide the trade universe, which stocks I'm going to trade, the which strategies, which rules, and based on the cost models, strategies. So brain will decide which universe I'm going to trade, and arm is the execution arm. It will decide when to execute it, how much and when. So that will be decided by the arms. So this is because we have latency issues. So typically the strategies will be run from uh, London or Hong Kong, but we have multiple markets. And so for in the each market, we'll have co-location servers like the which will have market data and the um, exchange execution arm. We call it exchange handlers. So we call it co-location. So we'll have it like in NSE, National Stock Exchange, or we'll have in TSE, Tokyo Stock Exchange. So we'll have those things in the inside the exchanges. So that will help us to. So these servers we will put inside the exchanges, co-location server we call it, to execute it. So these are the execution arms. So we relied on various like the market data, and so that will give it the highest weightage. News and sentiments we give some weightage, so, but that is also given weightage. And typically you can see that we have like low latency messaging or in-memory databases. So that is that enables us to do faster trading, because we have to change execute it quite fast. So that impacts the risk management, because since the trading is automated, so the risk management also needs to be automated, and compliance also. So we have risk simulators which will mimic the exchange executions. So the exchange, whether it will execute in 5 to 6 scenarios, we model the exchanges and we run those scenarios and see the risk in beforehand, before even it executes. And the risk programs will run parallelly with traders. So it's not like end of day we are going to see the risk, but we are going to have risk simulators which are going to run parallelly with the trading algorithms to see if there are any issues in the trade, because these are high frequency trading and most of the risk is intraday, because at the end of the day they typically square off all the positions and it's delta neutral. So the risk management also needs to change, keeping it with the trading requirement. Okay, so reg, tech, and legal. So aligns what machines are able to do with regulators' requirements. So now, like when we submit the reports, especially PRA or Fed, so now also there are pattern recognitions we use to predict whether the um our reports are going to fail beforehand or we are going to have any issues. So those validation checks or pattern recognition, we do it through models. So that is one thing that where the reg tech or regulatory technology are being used. Also, there is a unique case. Like you all know about the stress testing, which is happening in the US. So US regulator, Fed, they give every quarter all the banks, they give the various scenarios to the bank and they have to predict, they have to give based on the macro conditions and the micro conditions, and banks have to tell them how much capital do they require. And they keep changing the dates, like it's quarter, they don't keep it quarter end because they know that banks typically square off before the positions, they know what's the date. So they give some arbitrary dates. So like JP Morgan is building a model to predict what the dates are, so based on what positions, what scenarios Fed is going to give the dates. So such kind of things are also happening. ROG, trading detection. So that is a very important thing. So as in front office traders, they're not allowed to use the phones. So nowadays also their credit scores and even if they're given office phones or their chats, so there the trade surveillance programs are being run to see whether they're having any issues. Portfolio optimization, and you can see RPAs in operations and regulatory reporting. So we can see one fraud thing which Barclays has developed in one startup. So I will just show you one demo quickly. Can you hear? Can you hear?
It's not audible as of now.
1 minute. Let me again, I think I have to share this sound.
Okay. So our use case, like Sanjay mentioned, is
It's audible now.
Yeah.
for the Barclays corporate bank, the internet bank. We are trying to create a real-time fraud management system and prevent, and generate alerts and stop suspicious activity. I'll show you a demo for that. So what all does it take? What are we covering part of that? We can risk every single transaction which is coming in from 1 rupee to millions of rupees. Every single transaction scored. Okay, we're doing hybrid modeling on that, behavioral profiling, etc. All of this under 300, 500 milliseconds. And we give this information to the authorizer to approve or decline a transaction. And what we're talking about, Barclays deals with prestigious clients here, okay, and a lot of money flow through the bank. We are creating a segment of one for the bank, which means, and Reliance needs a different threshold from a Birla. We are able to do that, all of it real time. Okay, so here is an example of not inline past behavior. So what Clarify does, talks to the master database, pulls data, looks up the past history of the customer, how he is transacting, looks at the rule which the bank set. By the way, it can be done on the fly, and comes and gives an alert. So we built a simulator, internet banking simulator. So this is, like you see, this is an NEFT transaction, customer logging in, putting 10,000 rupees INR, and the transaction comes here for approve or decline. So this is looking at the past, no alerts yet. Second one, right? The second transaction comes in. It looks for a pattern which is detected. There's an alert generated there. It's real time. The alert comes in and says, for this particular transaction details here, alert score is 700, and this is a reason. You go into it, the complete history and evidence is there, which you can communicate emails and close the incidents. So complete case management and closed loop system to look at alerts and stop a transaction. So this is use case one. For use case two, we are having repetitive payment from one customer, the same beneficiary. The transaction amount is plus or minus 10% within a particular threshold. Okay. So the first transaction is keyed in, again 10,000 rupees. The second transaction is 10,200 rupees, and the third transaction is 10,100 rupees. All three in line according to the rule. There's no alert generated, and okay, the fourth action has the first transaction. There is an unusual behavior. An alert is generated. There is a risk score which has been scored, and say this is a particular reason which has been done. Now the authorizer has the ability to either approve or decline the transaction. So what we are doing here is, for a large corporate authorizer, he has hundreds of payments lined up. Each of it is high value for the payment to go. So we are doing pre-screening based on past history to do this. So that's what I wanted to showcase. We have completed this and looking at other use cases in trade finance, core banking.
So this is one of the startup which are working with us in RISE Mumbai. So as I said, so instead of competing with fintechs, so we are working with them on various problems. So we give them use case and we give our APIs, and they do the POCs. Once the POCs are successful, we scale them up, probably for one. And fraud is quite complex, and but it's becoming more and more important. It's always a question of speed versus the detection. So like in retails, we call it pattern detection or fractals. So we see the pattern. So if a person, like, he tries to browse in the mid of night, so what is his behavior for last 30 days, whether he typically behaves at that time, or browses that time, or he's only that day he's browsing. What is his IP address, whether he's a left-hander or a right-hander. So what is his typical browsing thing. So that based on that, we do analyze the fraud algorithms. But also there is some kind of acceptable fraud, because when a person withdraws the money from the ATM, so a lot of checks goes on in the background. But we have to also ensure that within 1 or 2 seconds or 3 seconds the transaction goes through. So it's always a question of speed and the fraud, and that should be within less than 1 or 2% true value. That should be acceptable, but beyond that it should not be. So that's kind of the algorithms which they work on, which they are. And and algorithms are also using reinforcement learning, so they're continuously improving, because fraudsters are also improving their ways of doing things. Okay, so we'll go to the next slide. Let me go full screen. Okay. Okay, so I think Vivek mentioned that a lot of you people are working on RPAs on the reporting solution. So we'll go through some of the use case. So before that, let me talk about when should we use RPA. So there are different thoughts of the banks. So banks, if we have multiple silos, multiple systems, so it's better to restructure the systems, have golden sources, reduce the system footprint, and then do the RPAs. Because otherwise, RPAs are ad hoc solutions, so they will not give you business benefit. So like I will give an example, like our credit reports, credit appraisal reports for corporates. So we had um, systems the data, the ratings of the company was in one system, the limits was in another system, and the reports, industry reports, we take
So your voice is again not audible.
1 minute.
May I request? Yes, now it's audible.
Can you hear me? Okay.
Thank you.
So let me share a screen. Sorry about that. So RPAs, before we do the implement the RPA, we should ensure that we have a optimized systems. We should not have multiple systems, because otherwise RPA, since called RPA, you will have it. Also, you have to think whether you have to build solution in-house, you have to buy a license. The license is also a huge thing. Anyway, we'll go through the
Did we lose the speaker?
No, the speaker is here. Mr. Satya, we are again facing some issues with the audio.
Okay.
Check
Should
on
I
it.
connect through mobile also? Okay.
Yeah,
If again it happens, I will connect through mobile also. So
Sure
that,
thing. Sure thing. Thank you so much.
Okay. I'll quick. How much time I have, Vivek?
We have few more minutes. You can try to wind it up. That's fine.
Okay. Okay.
We can
Sure.
take next 10 to
So
15
one
minutes.
is okay. So like automated clearinghouse. So you can see that. So we have various options. So we use automation anywhere or Blue Optima or UiPath, and we have our own solutions also, own workflow solutions where we go for the RPA. So you can see that one is the payment processing. So this is where the RPAs are used. Second is you can see that it's not a simple RPA, but it's RPA they are doing in a cloud environment, in an in-premise cloud environment, because we need a scale also. So as you can see, and our bots also we classify into two parts. One is the task bot, and other is the IQ bot, which will take decisions, which are task is they will automate the simple repetitive task, but IQ bots they will do the various ML or the IA, they will do a decisioning kind of a thing. So that is one thing. Mortgage appraisals, as you can see, so RPA was used to create automated bots to gather appraisal fees, order appraisals, complete the general accepted appraisal rules, perform appraisal follow-up notifications, and order second appraisals. So all this thing was done in under 1 day. So earlier it used to take 4 to 5 days. So they were able to reduce it in under 1 day. So you can see like how much time it is they have reduced, and typically errors they reduce. That is a big thing, because human when we do thing, if you have a set of rules, then there's a problem that humans they do mistake for the repetitive task. uh, Third is the HRMS. We can see they did for the HR system, and regulatory reporting. So where there we did our own solution for developing RPAs for doing the reconciliations, and also before we submit to the regulator, we did a validation. We call it IQ bot, which will try to predict whether there will be any failures before we submit that data. So that was quite useful for us. We were using around 10 to 15 people, and it was reduced to around 2 to 3 people for the reporting piece. So there we have a huge benefit. But key things to remember in RPA is it cannot be done for a small team. So minimum size you have to around 15 to 20 people, and you have to also think about cost benefit analysis, because license cost also is a huge thing, whether you have to do in-house or you have to do it take the license. And third is you have to see whether your landscape is good enough, because otherwise you are just automating a inefficient system. If you're using RPAs in your silos, so then it will not add value unless your data landscape is streamlined enough. So that's a quite important thing. So we can share more on the RPA front. Oh, sorry about that. Use cases of AI ML in risk, credit scoring. So credit scoring, so earlier systems were more focused on the traditional data. So now the AI ML we are using for alternate data. So I'll give you an example. Like India, we had a big bankruptcy, like Jet Airways and other banks. So some of the fintechs, they were able to predict. So we were working with one of the startups like CrediWatch and Stratlytics. They were able to predict the bankruptcy of Jet Airways through alternate data. So like whether they are defaulting to their provident fund or the gratuity provident fund to their employees. Uh, and whether they're paying their taxes in time. So those are the alternate uh, data which they're using. And also, is there any criminal case against the promoters? So India, the problem is the there's no unique ID in the court cases. It's listed with a name. Like it can be Nirav Modi, Nirav, only Nirav. It can be N Modi. So all that we have to use a ML algorithm to find out the actual match. Like this is person throughout the court databases. Like this is the person with a um, 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 problem. So this is one thing. And since most of you are CA, another thing we are using nowadays is the text sentiment analysis. So typically, uh, some of the companies dress up the numbers, but they are more frank in their auditor report or director report or in the annual report. So based upon the text, so we able to find a sentiment impact, and that is also added to the existing PDs, probability of default, to give the um, thing. Like some of the thing, like they will from numbers, we number seems okay, but more issues if we see the detailed annual report and the detailed director report and audit report. So that ML machine learning programs, text programs are analyzing, and they arrive at a propensity of distress in that score. That score we enter, then together we arrive at that score. So those kind of things are being used in the nowadays in the credit scoring models. Risk simulators for trading portfolio I discussed because those are needed, especially in high frequency and other trading. Predictive analytics that we use for trading portfolio based on different scenarios. So we simulate the market data, simulate the macro conditions, and try to predict how much will be my portfolio. RW and portfolio optimization. So I think this is one of the interesting area which all of us we are working in. Um, Also, we are analyzing the impact of Basel III and Basel IV regulations on the banks, and it has a huge capital impact. So especially in Basel IV, so I am working on, earlier I worked on credit risk, now I am working on the market risk FRTB requirements. So there is the regulators punish us if we don't have good data. So if we don't have all the data, like uh, we don't know which country the stock is, country of operations, we don't know what is the industry, whether it's a whether it's a exotic or it's a simple stock. So based upon that, the RWA changes. So so there we use kind of a reg text kind of a thing or a machine learning to find out what should get data, and based upon that we are able to save RWAs for that, especially in Basel 4 thing. Model validation much needed because it is not possible for a human to test all the parts, all the possible scenarios. So that we can do only through algos, which can cover most of the test cases, back testing, and also you can see behavioral models. So these are the future. So machines also learn. So learnable machine models are more important because as people start changing the behavior, the models will also learn over time and will able to adapt quickly. Because like as you say, the COVID situation, nobody of us anticipated such kind of scenario, and the nearest we had to go mimic that was like a 2008 crisis, but it was not a 2008 crisis. It's a different crisis. So anyway, such kind of things also models learn over time. So this you can go through it. So these are the some of the AI ML models. So as you see that where we used, so it's based upon the data and the data velocity. So based upon like if it is unstructured and it's it's a semi-real time, you can use video surveillance analysis. If it is real time unstructured data, we can use for credit and market risk in banks. For retail, of course, we can go for unstructured data also. But for corporates also, we are enhancing this space. So we are also taking the um, text data like the reports I mentioned, and also the social data also we are adding for the retail customers. So fraud detection is more a real time, and it takes both structured, semi-structured, and unstructured data. So these are some of the things you can go through. So digital transformation. So like you have to, as I mentioned, you have to see where your business should be going. What is your business model? Whether we have to bank only, branch only, or you want to expand to other geographies. If you want to expand to other geographies, what is the best possible model? Should we go with only digi model, or we should go with a hybrid kind of a model? And the engine of your transformation, do our current data tech operating model supports it? So it's not only tech kind of a thing. So it's like a big data, we have got it big data, but whether we are able to change our sales model, change our marketing model based upon the operations. Okay, so this is quite important. So as I mentioned about the algos, which I was working in Credit Suisse earlier. So what are the key things? What are the key ethical principles which I think even the regulator they are interested in? So I think these EU guidelines will be quite important for all of us when we develop a trustworthy AI. So I will go through quickly each one of them. Human agency and oversight. So so there should be oversight, human agency for all the algos. So I used to be responsible for algo certification for the various exchanges in APAC. In the end, they used to ask me one question: if everything goes wrong, will you be able to stop the algos? Will you be able to plug out the machine? So what is the plan B? So such kind of thing. And will you be able to continuously monitor the algos? If a fat finger like situation happens or a flash crash happens, what you should do? So that is one thing. Technical robustness and safety. So that is our infrastructure should be good enough. We should not be, because all components should be robust. Like we should not be, if a market data is stale or some component is broken and our orders or our models are, which I rely on, they don't get those data and they go airy. So that is important. Privacy and data governance, that is very important. So like it's all need to based on need basis. So earlier all the customer information so like used to be used by banks, but now it's like on a need basis only. Wherever they need the data, so that is important for making they can use. And also customers should explicitly approve the use of the data. Transparency, yeah, that's a very important point. If I reject a customer based on a AI or a ML model, a complex model versus a simple machine learning model which can explain why it is rejected, because regulators they always want us to explain whether there's on what logic we are going to reject a corporate customer or a retail customer, and those rules are more stringent in UK, so we have to give a explanation, so why, or a reason or a one line comment why it's rejected. So instead of a complete black box model, it should be explainable model, so like some kind of explanation to be able to give. uh, Diversity, non-discrimination, and fairness, yes. We in some countries we cannot discriminate based on we cannot reject a credit based upon gender or a marital status. So it varies from country to country. In some cases, in Japan it's of age, in US it's marital status. So these are different things which we have to. Societal and environmental well-being. So ESG I mentioned is the key focus now, environmental social governance. So anything which is harmful to environment, harmful to society, so that programs that should not be used. Accountability. So nowadays, earlier we used to have like compliance, risk. Now we have model owner, so model head also. For each models, algorithm or
Mr. Satya, you're there? Satya, your voice is not audible. Our speaker will rejoin and we'll just wind up the session 1. Everyone, if you have any questions regarding this, you can always put the questions in the chat box, or you can send these questions to us personally. The Q&A for this session will be conducted jointly with the another session from our guest speaker after a short break.
Vivek, can you hear me?
Yes, Mr. Satya, you are clearly and loudly audible.
Okay.
Yeah.
Okay.
I think
fine.
Satya, we may have to wind
So
up.
I'm mostly through.
Yeah. Okay.
Yeah.
Satya, you are on mute.
Can I share the screen?
Yes, you can.
Host disabled participant screen sharing. I'm getting a message.
Just a second.
No, you should be able to do your co-host now.
You are co-host. You should be able to do it now.
Okay, I am getting a error. 1 minute. I'm getting a message, host disabled participant screen sharing. Can you see my screen? No.
No, it's not visible.
Okay.
It's
So I think
fine,
I'm
sir.
already through.
We would love to hear from
Probably
you as well, actually.
so we
Yes.
can go to the next Q&A.
Yes, please. Yes. How much time does it take to blink your eye? We were not sure of the answer then when Mr. Satya asked it, but seems we all know the answer by now. Time spent listening to Satya's session. And I believe with the knowledge which he has shared and the content which he has shared in the last 50 minutes with us, most of us will agree with this. Thank you, Mr. Satya, for such a good session. Though we know that you must be having questions in your mind, but as I said, keep your seatbelts on, as the Q&A session for this session will be conducted jointly with our next surprise session from our guest speaker. At this very moment, banks are set up to be very risk averse, partly because of the controls that regulators have in place, whereas digital by definition is about taking risk and seeing whether things work. With all these challenges and topics, the question then remains that how the banking sector is expected to evolve over the coming period of digitalization. To answer this, we are fortunate to have Mr. Prashant Govil as a guest speaker with us to throw some light on emerging landscapes of banking in Bahrain. Mr. Govil is a financial sector specialist working with Central Bank of Bahrain, having extensive experience in banking regulation, risk-based supervision, financial stability assessment, commercial banking, corporate and infrastructure advisory. With this, may I request everyone to welcome Mr. Prashant Govil to share insights with us on the topic of emerging landscapes of banking in Bahrain. Mr. Govil, over to you.
Am I audible to everybody?
Loud and clear.
Can you hear me? Yeah, sure. Thank you. Thank you, Vivek. And good evening, members of the Chartered Accountancy Organization in Bahrain, as well as India and across the world. Thank you for inviting me for this session. Thank you, Satya, for a very interesting and insightful presentation. And of course, I'll continue from where you left, basically. But that is, I'm going to speak upon the future of banking in Bahrain, specifically only on that point. And before I start on the whole presentation, let me just tell you the inherent advantages for Bahrain, which is why Bahrain is being considered as a leading fintech center, not only in GCC, but today I was told by somebody from the FRA UK that there was an article in the Telegraph in UK saying that UK will lose its place of primacy in the fintech field to Bahrain, which is a proud achievement for CBV as well as for others in Bahrain. Nevertheless, so the advantage of Bahrain is basically that, yes, it has got a mobile penetration of more than 100%. So that's first a very good advantage, and a very small population which is techno-savvy. So what happens in this case is that, yes, the change and for adoption of technology becomes easier to spread and implement. And this is why Bahrain has been able to adopt fintech in the country, basically. So let me just share the screen with this. We just
Hello.
Yes, Rajesh.
Hello.
Yes, Rajesh.
चाय पीने आ रहे हो?
Yeah.
May I ask everyone to mute themselves?
Yeah. So can you see this sharing of the presentation now?
It's not visible as of now.
It's not visible. Let me just try it again. Share.
Yes,
Is it?
it's coming. Yes, it is visible now.
Okay. So so let me tell, of course, for the sake of people who are not stationed in Bahrain and in India, Satya also, Satya, we already have digital banks in Bahrain. Number one, of course, basically two digital banks. One is called as ELA, and the other is a product called Meme. And so, can anybody mute their microphones, because I'm getting disturbance noise? Yeah. Okay. So we already have digital banking initiation in Bahrain, wherein we have ELA Bank and Meme, which are providing remote banking services and which have no branches. As of today, ELA has about 15,000 customers, 18,000 customers as of till last week, and it is expanding, right? So this is the advantage of Bahrain. Now, before I start the full presentation again, yeah, this is to keep my back safe, because whatever I say is only my view and not the view of Central Bank of Bahrain. Otherwise, I will lose my job if I say because I can't speak on behalf of Central Bank of Bahrain, right? So let's go to the next slide. As now, the one of the advantages of Bahrain is the Central Bank of Bahrain, this approach to the adoption of fintech. Why we are doing it so quickly, and why we are the leaders in fintech in Bahrain, in the world rather, because we are proactive and we have agile regulatory framework with the objective to protect the customers. To be agile, we have a dedicated fintech unit at the CBB level. And before we adopt any technology for the Bahrain financial sector, we ask 4 fundamental questions, basically. 1, what is the offering, which is new in this particular fintech unit? Number 2, what is the new risk to the financial system with this type of product in the market? Number 3, if there's a risk, which are definitely which is. So how do we mitigate the risks? Number 4, finally, of course, for everybody, cost benefit equation for the customer, not for the bank, for the customer. But the customer will be benefited if it has to pay some money for the service charges, rather. And of course, if you see, we are a member of the Global Financial Network Group, GFIN. I think about only 18 countries are members of this particular group, which is basically to harmonize the regulations across these countries on fintech, which has members of as UK, Hong Kong, Singapore, Australia, the leading countries in fintech. So this is the reason why Bahrain is leading in adoption of fintech in the world. Now, before we go to what is going to happen or what is going to happen in the near future, let's see. Let's have a view, a bird's eye view of what is happening as of now currently. So we have different digital channels for servicing, for providing service to customers. And one is, of course, as you see, you can see you have banking done through kiosks, through mobile, through ATM, through internet, through POS machines, of course, the call center, branch, which is brick and mortar branches, which is traditional banking, and of course through the IVR. Now, if you see the purpose of fintech has got 2 aspects to it. One is the channel distribution, affecting the channel distribution, that is the financial disruption. So that is one. Other is the process automation part, the back end side. So in both the cases, we have been accepting the new technology as well as the new ideas and innovations. For this purpose, I think you already would be aware that we have an incubator in Bahrain Bay. We have a sandbox approach in CBB. We also have the proper a specific department dedicated within the government itself to support the fintech companies on the development. So I am going to talk about, in this presentation, I'm going to talk about digital banking, which we already mentioned. But the important point in the coming years would be robo-advice, or we call it digital financial advice. Then we will also touch upon delivery channels, which is the only channel which is now coming into vogue and increasingly becoming popular in advanced countries. Open banking platform. We already have the rules issued on open banking framework. Digital currency. Yes, I will talk about it later because we are thinking of digitizing Bahraini dinar. We already gone ahead. Cryptocurrencies exchange we have in Bahrain. Sandbox applications I'll talk about, and of course the challenges on regulatory aspect. So the first yes. So the most important, as I mentioned earlier, the financial disruption brought about by fintech has also led to differential products and services. And apart from many, but a very important one is digital financial advice. We have issued, the Central Bank of Bahrain has issued regulations regarding digital financial advice, where
Mr. Prashant, we can't hear you. Prashant is reconnecting. May I request everyone to have patience for just 2 seconds? Thank you, everyone.
yeah, am I audible now?
Clearly, yes.
Yeah. So let's talk. This is the operational risk aspect of technology. I think we should be getting used to it now. Can you see my sharing already?
Not yet. It's gone off.
Not yet.
It's gone off. Is it now visible?
Yeah.
Yes, it is.
Okay. So yeah. So I was talking about micro lending to mobile application. This is almost there in going to be, I think by this year, by 2021 June onwards, we'll have this application in place, wherein for small type of loans, you can on through your mobile download an application of this particular company and apply for loan. It'll be using eKYC, which is electronic KYC. So need not to go for a physical sharing of documentation or photographs. Because based on eKYC, you can go for a loan or a small amount. So this is a new thing which is going to happen in 2021. Robo advice is already in place. Cloud computing, by cloud computing, I mean the storage, the transit of information, the provision, the channels of service to customers, they will all be sourced in cloud. Amazon has, I think you would be only aware of Amazon Web Services. They have also asked three clouds in Bahrain for providing these type of services now. Chatbox. Now this is still in infancy in Bahrain, but the problem it may become mature within the next couple of years. But the negative point would be that it will replace call center services. Unfortunately, this could, of course, the jobs will be affected through that. But yes, this is going to happen in the near future. And I think you all would be aware of the first humanoid, the CCC, and I think in the world, no, second in the world, by name Fatima. Now, this is a robo, a lady, a robo. Of course, there's no gender to the robo, but her name is Fatima. And Ila Bank, or Bank ABC, basically bought by Bank ABC. So it will be given to Ila Bank, and it will provide your answers to normal customer questions. Now, that's the thing will happen to digital banking, omni-channel. This still is in infancy in Bahrain, but it is becoming increasingly popular across the world and into India, in Bahrain too. So what will happen is, instead of having multiple channels approach to a single customer, it will be a customer-centric approach, whether it's ATM or it's digital advice or kiosk or mobile phone. All this will be brought together to provide a customer-centric service to the customer. So that is important. And so this is going, this is not started as yet in Bahrain as much as in advanced countries. But yes, 2022 onwards, we could see this happening by year after that. I remember, Satya, you mentioned about open banking. We were one of the first countries in GCC to issue regulations on open banking. Way back in 2018, December. And we already have a license, given a license to one entity called Tarabut for providing open banking services. Now, initially, the open banking will provide service to customers in the form of giving them a choice of getting all the information across the various banks at one platform. So if today, as of today, as it stands today, if you want to access information across BBK, NBB, or other banks, you have to apply. You have to go to NBB website, go to your account, and then access your account information. Going forward, there'll be an application on your mobile phone which will give you your information of across the board of all accounts in the banks in Bahrain at one particular application. So this is something will be, this is the step 2 of open banking, which is going to happen, but I think 2021 itself, maybe by June onwards. Now, this is first thing. In open banking, the next, this is called, we call it AI space, aggregate information service providers. Next is payment initiation service providers. So there, the next step would be that this particular application or a company giving open banking services will allow you to make payments without going to your bank account. And by opening the application, you can make payment to any of a bank account or any other bank account. So this will be a part of open banking platform. I mean, it's already there in Bahrain, but yes, the open banking usage going forward, which can happen maybe in 2022 onwards, basically. This is still in infancy and WIP, work in progress. Yeah. As I mentioned to you that yes, open banking framework was introduced in 2018. The objective, I think everybody's aware, as Satya had mentioned to you, the advantages of open banking framework. Now, why I want to mention to you is that the open banking standards in Bahrain are really. Can you hear me? Hello? Yeah, okay. So what I want to specify over here is open banking framework and the standards in Bahrain adopted by the CBN Central Bank and the country are state of the art. Like, for example, they're based on the OVI of UK, standards in Australia, and the PSD2, which is of EU. So these institutions across the world, they have the latest standards in place. So that is which we are following. And we've already given license to 1 as of now, Sarabotan, and 2 are in the sandbox as of now. Digital currency. Now, I am trying to differentiate between digital currency and cryptocurrency. Now, in digital currency, we are trying to digitalize the Bahraini dinar. We have gone much far ahead in this, but the only difficulty we are facing is how to ensure smooth withdrawal of physical currency. That means you will have a virtual currency on a mobile phone or on whatever medium you have with you, instead of carrying the physical Bahraini dinar with you. So we are in the process of understanding how to withdraw physically smoothly. So for example, 1 dinar is made virtual, how that 1 dinar is withdrawn from the money supply from the economy. This, as of now, we are trying to test it. So let's see how that happens. The timeline and time frame was 2023, but I don't know when we'll finish off. Let's see what happens. Cryptocurrency, yes. Initially, our approach was very circumspective. We were hesitant to allow these acceptability. But now we have allowed a company called Rain to provide a cryptocurrency exchange in Bahrain. So what happens is that you can trade in cryptocurrency, okay, through the exchange only by registering yourself in there. 1. Number 2, but you cannot use cryptocurrency to purchase anything else. So if you use a debit card or credit card, bank will have to honor that particular transaction which is used for cryptocurrency through this exchange only. But if you go to any other exchange outside Bahrain or any other transaction, bank may say no to your use of debit or credit cards. This is discretion. Secondly, now this give an idea to you that yes, I think I mentioned earlier that yes, we have a sandbox. We have a combination wherein we have an incubator, we have a sandbox, and then we have a proper fintech unit in the government and in CBB to support the nurture the support the growth of the fintech company. So as of today, we have 27 applicants in Sandbox, which are talking about cryptocurrency exchange and ATM. This cryptocurrency ATM, which is still on a trial basis, it will give you the number, not a physical currency, it will give you a number. That number can be used for trading in the cryptocurrency exchange. But as of now, there is no, we will not allow the cryptocurrency to be used for purchase of physical items or in the shops as of now. Of course, blockchain technology remittance. Blockchain so far in Bahrain, we have not been very successful in observing that banks are using blockchain technology as of now. There have been trials, but there have been problems in terms of security purposes. That is why hacking. It is still not secure on that purpose as of today. Now, robo-advice services, we already have discussed about it because they have already issued rules. But we have one more company which is applied for Sandbox to provide robo-advisory services. Micro lending through mobile. This is what we discussed. Tokenization is another way. I think this is already in practice being done. They've asked banks to be compulsorily, have tokenization to be done by this year, by in October 2020. Because it means that, yes, you don't have to keep the card in your mobile or in your whatever medium you're carrying. Instead of that, you'll have given a token, which will keep the tokens of card numbers. So it is much safer and secure. Well, we have discussed this. And before that, one more thing on crowdfunding platform. We already have one company providing crowdfunding, which is in Bahrain now, but they have not provided a crowdfunding as yet because we have specific regulations. So crowdfunding also, we have licensed licensed entity which is Dubai based, and it may become operational by the first half of 2021. But the problem we are facing as a regulator is basically whether should we adopt proactive approach or let the market drive its practices. See, the objective, our dilemma is that if we allow the market to do the practice, to follow market practice, then if something happens, the customer suffers, then the blame will be on the regulator. So as of today, we are trying to follow proactive approach. Unfortunately, the knowledge base on the fintech products and services is still limited. So we have this problem of how to apply a proactive approach, but ensure that, yes, we do not limit the growth of the fintech companies by through a strategy. So accordingly, because with this strategy we're following, then how do we make rules? As of today, in the current scenario, we are having rules-based approach to the banks and to financing companies. That means make a rule and banks have to follow. But because of a limitation of knowledge, if you go principle-based approach, it means we give you a principle. For example, we give a principle of customer transparency when dealing with customers. So you make rules accordingly on that basis. The problem again would be that if there are companies which are maybe non-ethical, I'm not saying non-ethical, but yes, they in their aggressiveness towards business, they reward towards non-ethical practices, then the customer will suffer. And this is the reason why we are still slow in devising more and more regulations. The challenge also is customer data protection. Now, fintech, as you know, we have already heard so many cases wherein the servers, whether it was in India, if I remember, was hacked and the customer information was leaked out, and the customer were they had decided at advanced position. So we have to ensure this. So for that purposes, we're trying to understand the various security standards to ensure customer protection, to ensure the data is encrypted both in transit and at rest. To add to it, we have PDPL, the Personal Data Protection Law of Bahrain, which also ensures that yes, the data should be protected properly. But the challenge for us is how do you do it? And this is where we are trying to follow the PSD2 rules of the EU, so that which are state of the art, which are based on state of technology. So this is where we are. I mean, we plan to do in the near future also. Well, this is very common and very logical. Cybersecurity issues. Cybersecurity, we know that very well, that even the central bank is not free or is not protected. If I remember, Bangladesh central banks was hacked, and so much of a couple of $1 million were taken off from Bangladesh central bank, right? So this was a couple of years back, and in recent years also there have been various issues wherein the cybersecurity was found lacking. That is the reason why. So we are trying to see the latest developments in the cybersecurity field, and going forward, we are thinking of having a specific specialist in this field for the government, and have a separate department which can deal only with cybersecurity issues regarding fintech. I do not know what will happen in the future. I mean, final stance, but this is as of now. Which Satya also mentioned, the AML part, regulatory oversight, compliance. See, we all are members of FATF. I think you all are aware of FATF, correct? Now, we have to abide the FATF regulations across the world. FATF, as of today, are still moving towards, they're still understanding the impact of financial technology on the money laundering and AML. So what happens is, unless they're satisfied, if we allow some technology-based solution, or rather technology-based eKYC or on customer onboarding, so and when there's a case that goes to the law, or it goes international, what do you call law, court of justice, there we will tend to lose because they're not accepted by FATF. So this is another problem we are facing as of now. Though Satya mentioned that they have AML systems, but I do not know how many of those systems have been approved by FATF. So we in CBB try to coax the banks to go for those AML systems which have FATF compliance. That's first thing. Secondly, it is important that the fintech companies which are giving solutions to the banks, they have a compliance, because department by them in themselves. Why? Because we, by virtue, we have given guidelines, we have given regulations regarding securities, regarding the API standards. So they have to ensure that the API standards which they are following are in compliance with CBB's API standards. This is a problem because these companies, which are startup companies, are not fully equipped to handle compliance issues, which we are facing. And of course, the RegTech issue. Now, we are still in the, unlike RBI, I think RBI is now using the the pull approach for getting information from the bank, wherein they're able to access, I think, directly the core banking system of the banks. In Bahrain, we're still in process of understanding, should we allow banks to submit to us, or should we ask the banks to allow CBB to access to the bank's core banking system? This is still being discussed, but this will be finalized by this year, by 2021, and we will be able to reach to a conclusion wherein we will get access to banks' core banking system, or we will ask them to submit to us, which is being done as of now. Another challenge is, of course, motivating licensees to participate in digital banking. Now, digital banking, as you all would be aware, we have made in 2008, when we made the rules in 2018 December, we asked the banks to be compliant with open banking framework regulations by next year, by 2019, right? So till today, we're getting requests for more time to be open banking compliant with this API standards. So this is the problem we are facing, that many banks are saying to us, I mean, their rationale is that because of low customer base, it is not cost effective for them to implement open banking. So this is still, they're still deterring. So it is one of the difficult tasks for us is to either motivate or make it mandatory, which is already made it mandatory, yes, but yes, still they require more time to do it. And as I mentioned to you, the biggest challenge is between the cost and the income generation for banks. We know that yes, innovation and technology advancement is irreversible. So ultimately, banks have to do it. They have no option. But the point is, should do it now or later? As far we are concerned, CBB is concerned, we think that yes, you should not miss the bus. If you do it later, you miss the bus. And so we are trying to have an approach which is trying to motivate or coerce, not even motivate, coerce the banks to adopt open banking framework, digital banking, ASAP, which means not immediately, but yes, during the year or the next couple of years. Thank you. Any questions?
Yes, Prashant. Now, thank you, Prashant, for sharing those insights with all of our participants. It was indeed really good to know that how the banking in Bahrain is going to evolve. Personally, I'm also from the banking sector, so I found the presentation really intriguing. As I can see in the comments, from the members have the same feedback.
But let me repeat over here. These are my views. If somebody says that CBB views, I will negate it. I'll lose my job.
Sure. We'll make a note of that. Now, we'll move to the...
Me also, is personal views and not my Barclays views.
Yes, sir. Yeah. We duly take a note of that.
Sure.
Now, we'll move to the awaited Q&A session on future of banking and emerging landscapes in banking in Bahrain. But due to paucity of time, we'll be taking few questions than we expected, just to respect our timelines. The first question goes to Mr. Satya. Satya, our audience has asked, in Middle East, what could be the source of alternate data? Satya, you're there?
Vivek?
Yes.
If you do not mind, let me interject over here, because we have had this problem of bank asking us the same question to us. And what we have mentioned to them is they can use the Moody's proxy, or Fitch proxy, for Middle East for the data, because we have banks, the data is a problem for Middle East banks, specifically Bahrain.
True. Yes. Okay.
So I think we have tested some data for retail customers.
Your voice is not really audible. It's breaking. Maybe there is some network issue. The weather in India is not good these days, it seems like.
So let me reply in chat.
Yes. In the meanwhile, Prashant, I have a question for you. Can you please give some brief insights on the GCC uniform currency status?
Okay. The GCC currency, there are two aspects to it. One is GCC currency and one is GCC regulations on the banking sector. So the GCC currency status, if I give on a percentage basis, we are 30% harmonized in terms of discussions and the processes. Whereas for GCC harmonization of rules, we are 60% harmonized. So the timeline for GCC currency status is, of course, not my decision, it's a political decision. But harmonization rules, we are almost there. 70% is already completed, but 60%, sorry.
Noted. Prashant, I have one more question Actually, the question was addressed to Satya, but I have this question from both of you. Will the banking jobs disappear in future, and what will be the impact on bank audits?
Satya, will you reply first, Satya? Okay, if you
Yes.
let me.
Can you hear me now?
Yeah.
Yes, Satya, much clear.
Okay. So data, let me, I think I will take 1 minute on the data and second I will come back. I think we have tested Instagram, Twitter for retail customers, and for corporate customers, it will be always, we are relying on the like alternate data like um, the annual reports or the provident fund report or the additional data sources. So of course we will not have as much variety of data as we are getting in UK or other markets, and of course Barclays, we are not there in Middle East. I think they have exited, but those are the data which we can use as the alternate data. And will banking jobs disappear? No, but some of the routine jobs will disappear. Especially, I think a lot of people are in uh, plain vanilla bank operations, doing huge intensive manual like payment, settlement, confirmations. So those kind of jobs will disappear. Uh, and even complex jobs like trading. So those are also moving towards much more sophisticated, like algo trading. So, nowadays people expect uh, to have multiple skills. So earlier, like the same person should have the business skills. Also, he should have the some amount of tech skills, business tech, and how the world is moving. So the nature of jobs will change, but not disappear. But of course, the banks will become more lean and will work with different partners. So especially Prashant has already mentioned, like Bahrain is one of the leading example. UK, Bahrain, Singapore, these are one of the leading example of countries which have gone ahead with the fintech, and banks will be working more and more with the fintech partners. So some of the jobs will might move to the fintech partners or the ecosystem. So the whole ecosystem will absorb, and there'll be different kind of jobs which will exist.
Satya, can I also add something more in this? And that
Sure,
is
Prashant.
the one of the most affected jobs, I think, would be in call centers. If you correct me if I'm wrong, Satya, because we have the chat
Sure,
boxes and
sure.
others. We have had
Yeah,
a
yeah.
request from an institution, no names to be involved, wherein they want to use chat box instead of call centers, and that will make. I mean, if in Bahrain they have a call center over here, so if they close this down, they will losing of jobs. It's more important to redeploy the people from mundane activities of the banking to an activity which is specific or specialized. One thing.
Yeah.
And secondly, the focus will be on emotional quotient. That means you are involved in an activity which is involved either which covers data analytics, which always studies the human behavior. So when is not of interrelationship, direct relationship, it's more of studying the human behavior. So as long as you're involved in a job which is not mundane, and which is more connected with the studying of human behavior or data analytics, the job is safe. Otherwise, you have to think of redeployment. It's something like when we had these computers coming in India a long time back, there was opposition that we will lose our jobs. But after that, people got adjusted to it and they got redeployment. This is the reason why.
Sure. Thanks, Prashant.
With that, I would take the pleasure to conclude our Q&A session for first session of the evening. So may I have the permission from both of our speakers? Can I conclude the session?
Thank you. Thank you, Vivek. Thank you, Satya.
Thank
Sure.
you, Prashant.
Thanks, Vivek. Thanks, Ajay. Thanks, Prashant.
Thank you.
Thank you, everybody.
And to our participants, good things come to those who wait. So keep waiting, because at the end of our second session lies an interesting Kahoot quiz for all of our members with exciting prizes. In life, the passage from one second to another is always critical, because every second contains infinite possibilities that can change or end your life in every way possible. Now, we'll be moving from first session to second session rather than second. India is the world's top receiver of remittances, claiming more than 12% of world's remittances in 2015. Remittances to India stood at $69 billion in 2017. According to a Ministry of External Affairs report published in 2019, there are 32 million NRIs and PIOs residing outside India. However, the landscapes keep evolving. The regulation governing the NRIs keep on advancing. And being a chartered accountant, we are morally obligated to keep ourselves abreast of these changes. So, to help with that, we have FCA Jaikumar Tejwani, Managing Partner of Messrs. Jaikumar Tejwani and Company with us, who is expert in international taxation, direct taxation, NRI and FEMA regulations related matters. And he has been a convener of NRI and FEMA study group of NIRC of the ICAI in the past. Alongside, we have on board someone I can personally call my mentor, who helped me to become the person I am today. FCA Bhupendra Mantri, Senior Partner of Messrs. Kalani and Company, my articleship firm, expert in IFRS and IAS, FEMA, internal financial controls, and other related subjects. He has served as a member of AASB and various study groups constituted by ICAI, published several materials on IFRS and related subjects. Mr. Mantri has been a speaker at over 200 technical and non-technical events. Now with that, not taking much time, may I request FCA Jaikumar Tejwani and FCA Bhupendra Mantri now to take us on this exciting journey of advancements of regulatory landscapes for NRIs in 2020. Over to you, sir.
Thank you, Vivek. Thank you for such a wonderful introduction. And good evening to everyone. A very happy 2021. Very impressive presentations by Prashant and Satya. But I must add that India is also on the same lines. The open banking platform in India is already there for last 2 years now. And in fact, we are doing pretty good. So Vivek, can you give me the sharing rights?
Yes. You are already a co-host, sir. So
Okay,
you can start sharing your screen.
Yeah, sure. Is my slide visible?
Yes, it is.
Okay.
You can continue.
Thank you. Okay, so I will start from here. Just give me a minute. Okay. So I'm going to talk about the direct taxes, particularly the residency rule in India, which has undergone a significant change in the year 2020. Also, I'll be talking about some very special regulations for non-resident Indians who are settled abroad and earning foreign currency. And at the end, I'll also be talking about the various other important notes for non-residents to know about gifts and monies which they accept from India. So let me start with the residency rules. Rules of residency. As far as Bahrain is concerned, currently we do not have any DTAA, the double taxation avoidance agreement with Bahrain, but India has TIES, the Tax Information Exchange Agreement with Bahrain. And as per the Ministry of Finance and National Economy of Bahrain, the residency rule is that the applicant must be present in Bahrain for a period or periods of not less than 183 days, not less than 183 days. in total in the year as required for the residency certificate. In India, the basic rule of residency is that the stay of a person, of an individual, should be of 182 days or more. So 183 days, not less than 183 days, Bahrain, and India is 182 days or more. Let's understand with the help of an example here. And the example is example 2, that one Mr. Ashwin, during Indian financial year of 2019-20, he was in Bahrain exploring the options during the period April 1, 2019 to August 31, 2019. And then in India, he was from September 1, 2019 to March 31, 2020. So you could note that his total stay during Indian financial year 1920 was 212 days in India, and in Bahrain, he was 153 days. So if we go back to the Ministry of Finance National Economy, 183 days should be the minimum period to be the resident of Bahrain. So during financial year 1920, he is tax resident of India, as his stay is more than 182 days. Now, Mr. Ashwin, who was in India from January 1 to March 31, 2020, he moved to Bahrain from April 1, 2020 and onwards. And he was in Bahrain till 31st of December 2020. And as Bahrain follows the calendar year, his total stay during year 2020 was 275 days, whereas in India he spent 91 days. So for the year 2020, he is tax resident of Bahrain. So he can get the tax residency certificate as the resident of Bahrain. There were certain exceptions to the rule of residency, which were introduced by the Finance Act of 2020. And this is something very interesting and important to know. So one of the exception is that an individual who is citizen of India, which I guess most of us here are citizens of India, and if the total income in India in the financial year in India exceeds Indian rupees 15 lakhs, and the Indian income is not liable to tax in any other country due to his residential status, such an individual who is citizen of India shall be deemed to be resident of India. Of course, his status would be resident, but not ordinary resident, which means that only income earned in India would be taxed, but he would be deemed to be resident of India. This is a welcome step, which is brought in because of the BEPS and various OECD guidelines to avoid the statelessness. So let's understand it with the example. Mr. Babu Raj, who is a citizen of India, is employed in Bahrain and he earns salary income in Bahrain. Babu Raj also has a house property and investment incomes in India, which amounted to rupees 25 lakhs during financial year 20 and ending on 31st March 21. And during this financial year, he stayed in different countries. So please understand this example with the exception. In Bahrain, he was present during April to June 30th, 2020. And because of pandemic, work from home was allowed. He moved to India, and he moved to India on July 1, and he was in India till October 31st. From November 1 to December 31st, he moved to Malaysia. Again, 31st is January 1, 2021 to March 1st, 2021, he moved to Bahrain. So during the year 2020 to March 31, 2021, his total number of days spent in Bahrain was 151 days. In India, he was there for 123 days. In Malaysia, between November 1, 2020 to 31st December 2020, and then March 2nd, 2020 onwards. So Malaysia, 91 days. All these countries have the residential status as 182 or 183 days. So considering this example, Baburaj is not the resident of any of the jurisdictions, neither Bahrain nor India nor Malaysia. But because of this exception to the rule, Baburaj being citizen of India, he shall be deemed to be the tax resident of India, and his tax liability, of course, would be limited to the Indian income. But for all practical purposes, wherever he goes, like Malaysia, he would be a deemed Indian resident. This is exception 1. Exception 2 is, again, this is effective from financial year April 1 of 2020. Now, this is very interesting. That here, an individual who is citizen of India or is a person of Indian origin who is being outside India, and he comes on a visit to India in any previous year. Normally, a person who comes on a visit to India from outside India, he would not be considered as resident in case his stay is up to 182 days. This is a normal condition. The Finance Act of 2020 has added a condition here, an exception here, that if such person who comes to India on a visit from outside India, and he's either a citizen of India or a person of Indian origin, and his stay exceeds 120 days in India, and he has Indian income which is exceeding 15 lakhs, he would be considered as the resident of India. So 182 days would be ignored, and 120 days would be considered as the base of his becoming the resident in India, provided he has Indian income exceeding 15 lakhs. So like in previous example, Baburaj, if he stays in India for more than 120 days, he already has an income in India exceeding 15 lakhs. So he would be considered as a resident in India. So this is very important exception. Similarly, as per the Indian Foreign Exchange Management Act, called as in short as FEMA, a person resident in India means who is in India for more than 182 days during the preceding financial year. But FEMA talks more about intention. The baseline, of course, remains more than 182 days, but intention is very important to make a person who has been in India for more than 182 days. And if the intention is that after spending 182 days in India, a person has gone out of India or who stays outside India for employment or carrying on his business or profession, and his intention is to stay outside India for an uncertain period, despite having spent more than 182 days in India in that particular year, he will not be considered as resident. So RBI FEMA is more about intention. Similarly, a person who has come to stay in India and he has come for taking an employment in India or for carrying on any business, vocation, profession in India, or for any other purpose, say after retirement or maybe settling down in India, where the intention is to stay in India for uncertain period, he would be considered as resident of India. So RBI is more about regulation or a regulatory law. Income tax, India or Bahrain, is more about the revenue law. So why are we reading? Why it is important? The purpose is the residential status of a person is very important for determining the taxation, exchange control laws, and FDI investments in India. So, as per the Indian income tax rules, here I would like to clarify that Bahrain has no tax on individuals or corporates as such, but because of the basic regulation of residency, the persons are liable to tax. Currently, there are no regulations to levy tax. So in India, we consider it as zero rate tax. So again, coming back to second paragraph, as per Indian income tax rules, when an individual becomes resident in India, he will be taxed on his global income. However, if there is any overseas income which is being taxed in that overseas country, and there are certain taxes which are paid outside India, he will get the tax credit of all such taxes paid in India. Of course, as far as India Bahrain is concerned, if a person from Bahrain he becomes a resident of India, the global income becomes taxable in India, and there would be no tax benefit as he has not paid any taxes in Bahrain. So, what is the importance of residential status under FEMA and tax? Under FEMA, there are regulations for undertaking specific transactions only by non-residents. Like NRIs can keep the NRE deposits. Nobody else can have NRE deposits. And whatever interest is earned on NRE deposits in India, it is all tax exempt in India. Similarly, a person who is resident in India now, he may continue to hold, own, or transfer foreign currency, foreign security, or any immovable property situated outside India if he has acquired such assets when he was resident outside India. So this is a very welcome change, which is there now for almost nearly 2 decades, that if a person from outside India has come to India and is settled in India, and he is holding any assets, movable or immovable outside India, he can continue to do so without any approval from the Reserve Bank of India. Similarly, a person who is resident outside India, he may hold, own, or transfer Indian currency, security, immovable property situated in India if such property was acquired when he was resident in India or inherited from a person who was resident in India. So a Indian resident who has gone outside India, if he already owns a property, either through his own sources or inherited, he can also continue to maintain those assets, movable or immovable, outside India. So therefore, the residential status is very, very important. So this is a detailed look, which I'm going to skip. There are certain very specific and special provisions which are related to incomes of non-residents. And of course, there are certain conditions to avail these special tax rates. First important condition is that a person who wish to take the benefit of reduced tax rates, and such individual should be citizen of India, or he should be person of Indian origin. And currently, who is not resident of India. So only COI, citizen of India, or PIO, person of Indian origin, can avail these beneficial rates. And in short, we will be referring to these individuals as non-resident Indians. Second condition is that such non-resident Indians has made investment in foreign exchange specified assets. So to avail the reduced tax rate, such non-residents must have made the investment in specified assets. Not every asset is specified. The specified assets are shares in an Indian company. It could be a public or a private limited company.
Yes, it's clear now.
Am I audible and slides are okay?
Yes, now it's fine. Yes.
Okay, so there was a disturbance in between?
Yes, it's fine. It's fine. It's working fine.
So second is, so investment, specified investments are shares in an Indian company. Second is debentures and deposits with Indian company which are not private limited company. So specified investments in debentures and deposits of public companies is considered as specified assets. And third is any securities of the central government. And another one which is not mentioned is having any income from immovable property which is sourced out of foreign exchange, convertible foreign exchange. So these are the specified investment. And third is that such non-resident should have made the investments, the specified asset investment, in convertible foreign exchange. So in short, an individual who is citizen of India or PIO, and he has sent convertible foreign exchange to acquire the specified assets, his tax rate in India reduces significantly. The investment income earned are only taxable at the rate of 20%, as against the maximum marginal rate of 30%, and including surcharge, it could go up to 42% in India. But in a case of a non-resident, the investment income is taxable only at the rate of 20%. Similarly, long-term capital gains on sale of these shares, debentures, securities, or immovable property, if they have been sourced through the convertible foreign exchange, they are taxable only at the rate of 10%. Very, very interesting and important provisions that are there in the Indian Income Tax Act. Certain important things to be noted: that investments in India by non-residents is not permissible in small savings of post office and the public provident fund. Neither can they invest in any agricultural and farmlands. And very interesting amendment which has been brought down is that non-residents need not file tax returns in India if income comprises only of investment income and or long-term capital gains, and appropriate taxes have been deducted from such income. So in case they are earning investment income and taxes have been deducted at 20%, or if there is any long-term capital gain and income taxes have been deducted at 10%, and they need not file any tax return in India. So this is a detailed look, which I'm skipping. Let me come to the last part of this, the taxability of the sum of money paid by a resident in India to a non-resident. So there is a new section which has been inserted in the Indian Income Tax Act, effective 5th day of July 2019, which says that where any sum of money is exceeding rupees 50,000 rupees in Indian rupees is transferred to a non-resident, or if there is any immovable property, the stamp duty of which exceeds 50,000 Indian rupees is transferred to a non-resident, the transfer of sum exceeding 50,000 will be taxed in India. Earlier, this clarification was not there. So resident Indians were able to transfer money and properties, and there was no tax liability arising either in the country of their residence or in India. But effective 5th day of July 2019, the amendments have taken place. So taxability will not arise if the same is received from any relative. Relative is a very elaborate definition, including the family members and their close relatives, or if the money is received under will or inheritance. So the last one from my side, gifts which are not taxable. The total value, if it doesn't exceed 50,000, not taxable. if they are received on the occasion of marriage, not taxable. If received from the relatives, which includes parents and close, not taxable. And received gifts from other than specified relatives is taxable if the value exceeds. So these were some of the very important amendments which I thought I will discuss, and then this is a detailed one, and we'll take a question and answers. I'm done with this. Thank you very much.
Thank you, Tejwani ji, for such a brief and beautifully conducted session. Is my voice audible and clear?
Yes, yes. Yeah.
Yes,
Yes. Thank you so much. Now, before taking up the Q&A session, I would like Mr. Bhupendra to carry forward the session and take us through other aspects of NRIs regulations, which will be of very interesting view for us. Thank you so much. Over to you, Bhupendra sir. Sir, we have made you co-host. You can share your screen and you can unmute yourself now. Thank you.
Yeah, so I am properly audible.
Loud and clear.
Hello. Yes, Vivek.
Loud and clear.
I am audible. Yeah.
Yes, yes, loud and clear, sir.
So thanks, Vivek. Thanks for introducing us in such a good manner, and we are also thankful to the Bahrain chapter and chairperson Ajay for giving us this opportunity to speak before the member of Bahrain chapter of ICI. And as always, it is a basically privilege to be a speaker on the forum of any of the ICI chapter or the branch. I will be sharing my presentation over here, and then we will start with. So basically, Tejwani ji has taken us through various direct tax laws provisions related to the NRIs, particularly the recent amendments related to NRIs taxation. I will be dealing with certain foreign exchange management regulations related to the NRI, and particularly various capital account transactions which can be done by NRIs in India. So if we see, and my most of the presentations will be basically containing the provisions related to NRI as well as OCIs only, and any other thing I have not covered in my presentation. Yeah. So basically, if we see Foreign Exchange Management Act and the regulations, this permits various capital account transactions with an exception only. Generally, these capital account transactions are prohibited from the NRI and other persons' perspective, but they are permitted either by way of FEMA law or by way of various regulations under the FEMA. So in my slide, I have covered various permissible capital account transaction for the persons who are resident outside India, and these are the persons who are non-resident Indians and who are OCIs, overseas citizen of India. So basically, if you see these slides, I shall be covering these white bullet points only in my presentation. These are the various permissible capital account transactions for the persons resident outside India. I will be covering investment in India in various securities issued by the body corporate, that is, they are the companies, or an entity in India. It may be like an LLP, and and investments made therein by a person resident outside India. Then investment by way of contribution by a person resident outside India to the capital of firm or the proprietary concerns or the association of persons in India. So these are the various investments which can be made by an NRI or by OCI. And transfer of immovable property in India by these I will be covering in detail in my presentations. And the last one is remittances outside India of capital assets in India of a person resident outside India. That I will be covering. Some of the aspect I will be covering through liberalized remittance scheme of the government of India, of the prescribed by the Reserve Bank of India. So these I will be covering in my presentations. Rest of the things I have just noted down for your reference purpose, but these are not covered in my presentation today. So friends, now coming to the various investments which can be done by non-resident Indian or by the overseas citizen of India. If you look to these investment opportunities which are there in India, these can be again categorized into the two type of investment. One are repatriable investments and the other is non-repatriable investments. And what is repatriable investments are? They are made through money in non-resident external account or foreign currency account. These type of accounts are basically funded by the money to be received from abroad. And then there is non-repatriable investments, which are an NRI maintains an NRO account to manage his Indian income received in India in the form of rent, dividend, pension, etc. And the funds are held in the NRO account, which cannot be taken by NRI easily to his country of residence. He cannot take this fund back to his country of residence, and therefore it is called as a non-repatriation, and the account is called as a non-repatriable account. So basically, if we again see that what are the exact provisions with reference to these repatriable investments as well as the non-repatriable investments, most of you must have heard about the foreign direct investments. So being an NRI, always you must have heard this particular terminology, foreign direct investments. And friends, recently major amendments have been taken place by way of Reserve Bank of India notification number SO3732 dated 17th of October 2019. So not more than 1.5 years rather. Only 15 months have taken place after this particular notification. So why these notifications? The RBI has come out with these FEMA non-debt instruments rules 2019, and these rules are very important considering the investment opportunities for NRIs in India. These rules defines that what are the foreign investments, and the foreign investments means any investments which are made by a person outside India on repatriable basis. So here these foreign direct investments, what we are talking about is they are on repatriable basis in equity instruments of an Indian company or in the capital of LLP, limited liability partnership. So these investments can be made on repatriable basis either in the equity instruments of an Indian company or in the capital of limited liability partnership. And friends, these investments can be either through automatic route or it can be through the government route. I will not be discussing that where automatic route is there and where government route is there, considering the limited time available. But I would just like to invite your attention to the fact that the uh, table which has been given in the schedule 1 of these rules, non-debt instruments rules 2019, that provides the sectoral cap of investments to be done in the various sectors. And if we see that what are the sectors and what is the cap available for these sectors, then there are certain sectors where even 100% investment can be there by the NRIs. And these sectors are, I would just give the name, few of the name, because it is a long list. One is agriculture and animal husbandry sector, plantation sector, mining sector, manufacturing sector, including the contract manufacturing, construction development sectors, that is township and housing sectors, then industrial park sector, pharmaceutical sectors. So these are the sectors where 100% capital investment can be there by the NRI. Apart from that, there are sectors where less than 100%, say in the print media sector, it is the limit of up to 26%. Then in private security agency, there is a limit of 49% sector, 49%. In multi-brand retail trading, there is limit of 51%. So these are certain limits where a particular, these are certain sectors where the NRI can make the investments. And if in the list there is no specific sectors, then in those sectors 100% investment is permitted on the automatic route until if these sectors are not prohibited by the FEMA rules. So what are the prohibited sectors? I would just touch upon the list of those prohibited sectors. So basically, these are the prohibited sectors. One is the lottery business, and then gambling and betting, including casinos, then chit funds, nidhi companies, trading in TDRs, real estate business or construction of farmhouse. So here in real estate business, basically the trading of real estate properties is prohibited, but one can invest into the townships and other construction projects. Then manufacturing of cigars and these other tobacco products basically. Then activities sectors which are not open to the private sector investments, including atomic energy and railway operations. Then foreign technology collaboration in any form, including licensing of franchisee, trademark, brand name, management contract is also prohibited for lottery business and gambling and betting activities for these particular activities. So these are basically prohibited sectors. So I will not be basically discussing what are the detailed sectors now, but again, uh, what are the rules related to the transfer of securities I would be discussing, because uh, once you invest into a particular company or into a particular sector, then certainly it is necessary to know that how the amount can be taken back from India to out of India. So a person resident in India can transfer the equity instruments of an Indian company or units held by him to any other person who is resident outside India by way of sales and vice versa. So you can basically once have the equity instrument of an Indian company as an NRI, you can transfer it to the other NRI also. So that is one way of transferring. Then further, a person resident outside India can transfer the equity instruments to a person resident in India by way of gift. You can transfer these items, these securities to the person who is resident in India by way of gift. And similarly, an NRI or an OCI holding equity instruments of an Indian company or units on repatriation basis may transfer the same by way of gift to any person who is resident outside India, but in that case, they require prior central government approval depending on the sectors in which the company is engaged. And in case of transfer by the gifts is from a resident to a non-resident. Suppose a person who is there, who is a resident and having these shares and wish to transfer sum of money, wish to transfer these securities to non-resident, then again a prior approval of Reserve Bank of India will be required, and that prior approval will be subject to various conditions like the donee who is NRI should be eligible to hold such a security under these non-net instruments rules 2019, and he cannot give the gift not more than 5% of the paid up capital of the company. Then by way of such gift, the sectoral cap should not be breached, and that gift can be to a person who is a relative under section 277 of the Companies Act 2013, and the aggregate value of this gift should not exceed more than $50,000. Value of such gift should not exceed more than 50,000 US dollar. So that is the basically requirement where an Indian resident is giving a gift of shares to non-resident, and prior approval of RBI will also be required in such case. Now, apart from these uh, investment opportunities in the equity of a particular company, where sectoral cap is also defined under automatic route as well as the government route, there are certain more opportunities for investment on repatriation basis, uh, which I have listed in the next slide. And one of the opportunities that you can purchase or sell the equity instruments of a listed Indian company on a recognized stock exchange, and condition is that such purchase and sale should take place through the authorized dealer, through a branch of the authorized dealer, and these authorized dealer are generally bank branches in India. So bank branches designate certain specific branch. The banks designate certain specific branch as an authorized dealer in India, and the holding of one individual should not be more than 5%, and in aggregate, if there are more than one individual, then it should not be more than 10% holding of such an listed Indian company. And these listed Indian company can, by way of resolution, uh, increase the limit of this 10% to 24% by way of special resolution. So that is one requirement. Then another option, here again, you can purchase the shares of a listed company on recognized stock exchange, and as and when there is a sale, that sale proceed can be repatriated to repatriated out of India. Then another is purchase or sale of the units of domestic mutual fund, wherein these domestic mutual fund invest more than 50% in the equity. So you have the opportunity of making investment in the domestic mutual fund, and whenever these are sold, the money can be repatriated out of India. Then third one is purchase or sale of shares in the public sector undertaking without any limit, and which are being disinvested by the central government. So as and when there is any disinvestment by the central government of any particular public sector enterprise, you have an opportunity to make any investment, and that too without any limit. And fourth one is subscription to the national pension system, which is governed by the Pension Fund Regulatory and Development Authority, that is PFRDA. So you have the opportunity to make investment in such national pension system also. And for all these purpose, one need to follow RBI instructions that what should be the mode of payment and how the remittance of sales should through which banking channel it should go, and then what are the reporting requirements. So those reporting requirements also are required to be followed by the investors. So I will not be discussing this much in detail considering time constraints. Now next is the investments by NRI and OCI on non-repatriation basis. So basically, non-resident Indian and overseas citizen of India, they can make investment on non-repatriation basis, and most of these investments are then without any limit. See, if we have seen this first bullet point, purchase or sale of equity instruments, convertible notes, units, and contribution to the capital of a LLP. So for repatriation basis, there was there were various limits as to the sectoral cap, as to the investments in listed Indian entity. That yes, 5% limit is there for individual and 10% limit is there for individuals in aggregate. But for non-repatriation basis, that means if you are investing into India and ready to not to get back that money from India to out of India. So in that case, there is no limit as to making the investments. You can always own the 100% of the equity instruments of such entity, then purchase or and that equity instruments can be purchased either through stock exchange or it can be purchased outside stock exchange also. Then also there is no limit if you have intention to not to repatriate your money from India to out of India. Then purchase or sale of units of domestic mutual fund, again it is without any limit, but there is a prohibition on purchase of equity instruments of Nidhi, real estate and agriculture company, or by NRI, OCI, or any trust or firm which are owned by these NRI or OCI. But at the same time, you have an opportunity to enter into the real estate business by making investment in the REIT, that is real estate investment trust, which are registered under SEBI. So that opportunity is there, but you cannot deal directly in the land and building just for the purpose of profit, directly in the sale and purchase of the land and building or real estate property. So these are certain relaxations as to the investment in real estate, particularly in the real estate investment trust. And apart from that, you can basically invest into the earning of invest for the purpose of earning of the rental income on the lease of property. You can take certain property on lease and give it on rent and take the rental income out of these real estate properties, and that too on non-repatriation basis. So again, the FEMA rules prescribes that what are the mode of payments and how the that remittance of sale proceeds of investment made can be done. Of course, it cannot be done out of India. Then we need to follow the various other RBI instructions in this regards. Then investment in chit fund by the NRI, that is also allowed. Then contribution to the capital of a firm or a proprietary concern which is not engaged in the agricultural or plantation activity, print media or real estate business. So apart from the investment in equity instrument of a company and the investment in LLP, in non-repatriation basis, investment is also allowed in the firm as well as the proprietary concern. And of course, that should not engage in the agricultural or plantation activity or the print media and the real estate business. Now, investment in LLPs, that is one more aspect of foreign direct investment. So NRIs and OCI may contribute to the capital of LLP, which are operating in the sector of activities where foreign investment up to 100% is permitted under automatic route, and there are no FDI linked performance conditions. So in fact, if we see the FDI rules, table 1 of the schedule 1 of the non-debt rules, that provides for certain specific conditions which are basically linked with the foreign direct investments, that if any company is receiving the foreign direct investments, then the company as well as the investor have to follow those specific conditions. So if these conditions are not there, then 100% investment is permitted into those sectors in the LLP. Then investment by way of profit share shall also fall into the category of reinvestment of earnings according to the FDI rules. Then it is subject to the LLP Act 2008. Here in India, there is a Limited Liability Partnership Act 2008 that particular act. And where a company is having a foreign investment and engaged in a sector where foreign investment up to 100% is permitted, then that company can be converted into the LLP also. So if suppose someone has the investment in a company as of now, foreign investment in a company, and if it satisfies these conditions, then that company may be converted into LLP also. So these are the specific rules, and vice versa rules are also there, that if there is a for LLP and having the same conditions, then that can be converted into a company. So those vice versa rules are also there. Then investment in LLP should not be less than the fair value, fair price worked out as per any valuation norm which is internationally accepted or adopted as per the market practice. So basically, intention is that whatever investment in LLP is made, India being a foreign exchange earner in that case, that says that the fair price of such investment should not be less than the valuation which has been prescribed as per the international practices. And in case of transfer, it is the reverse, that wherever there is a transfer of such capital contribution, then the consideration should not be less than the fair price of capital contribution. And where there is basically a receipt, then it should not be more than fair price of the capital contribution. So here basically provisions are there so that it can aid to the exchequer of the government of India's foreign exchange. Then apart from that, investment in investment vehicles, certain provisions are also there. I will not be discussing this in detail considering the time constraints. Now coming to the acquisition and transfer of immovable property in India. So these rules are again basically prescribed in these non-debt instruments rules 2019 only. Earlier, hitherto, different rules were there related to acquisition and transfer of immovable property in India. But now, in 2019, October 2019, when these non-debt instrument rules came, provisions related to acquisition and transfer of immovable property are covered by new rules only. So, NRI or a person or a overseas citizen of India, they can acquire the property in India either by way of purchase, so they can have a direct acquisition. They can receive property by way of gift, so from someone, some relatives basically, they can take the property as a gift, and then they can also acquire such property in inheritance. So by way of will and inheritance, such property can be there acquired by NRI or OCI. So in detail, we shall discuss this aspect in gift and inheritance in the next slide. Then there are provisions related to joint acquisition by the spouse of NRI or an OCI, even if that spouse is a person non-resident and not NRI or OCI. So if someone has a spouse who is not NRI or nor OCI, but in that case, the both NRI as well as his or her spouse can take property in India jointly. The condition is that such a spouse should have her marriage registered, and such marriage should be subsisted for a continuous period of not less than 2 years. If that condition is satisfied, then even the joint acquisition in the immovable property is there. So uh, you have, if even if you wish to acquire your property in India, you also have a choice of having your spouse from the foreign land.
চলছে এখনো
Vivek, there is some
Yes.
disturbance.
Yes.
Yeah.
Now I have taken care of it. You can continue, sir. You were talking about the spouse from other country.
Yeah. So you have a choice to have a spouse. Vivek, I think you are not yet married.
No, sir. That's why actually I'm listening to your sides from all aspects.
You are just listening this with lot of curiosity, in fact.
Yes, sir. Investments, regarding investments. Yes.
Acquisition of immovable property for carrying on the permitted activities. So through branch office or as well as the other place of business. Suppose you have entered into India and had a have a branch office as well as any other place of business other than the license office, then and these offices are for the purpose of certain permitted activities like agriculture or like mining or like any other activities which are defined in the sectoral cap or the manufacturing activity. So in that case, for that particular purpose, you can acquire the immovable property in India. And any such property which has been acquired or which is there with you can also be mortgaged to the authorized dealer as a security against the borrowings to be taken from any particular lender. So such property can also be offered as a security. These 2 points I am not discussing much as they are not of much relevance. These red points I will not be discussing, considering their less relevance to the today's seminar, today's meeting. Then repatriation of the sale proceeds of immovable property. So you can repatriate the sale proceeds, provided that such investment in the immovable property has been made out of the foreign exchange, which has been remitted from abroad. So if that condition is satisfied, you can repatriate the sale proceeds of immovable property outside India. Then there is prohibition on transfer of immovable property in India by the person resident outside India, except as otherwise provided in the FEMA. Then transfer of immovable property by the person resident outside India through proper banking channel. So all related banking aspects should be basically followed. In fact, when we have started this presentation, considering that the first session was related to the banking, we thought that somehow maybe that our earlier speaker covers this. So we have especially not covered these aspects. But anyway, I think they are more on the procedural aspects. These rules are more on the procedural aspects, which can be taken care of as and when need arises. Then the transactions in immovable property only through the banking channel we have discussed, and on the payment of taxes. So all related taxes should be paid as and when such transaction takes place. Regarding gift and inheritance, I have said that gift should be from the person who is resident in India, and a person who is relative. From that, a gift can be taken, immovable property can be taken in gift. And apart from that, inheritance can also be taken from a person by a person resident outside India. Of course, that inherited property should be acquired in accordance with the FEMA regulations. So those are the rules. Repatriation of sale proceeds I have discussed. Then liberalized remittance scheme, I would just finish in 1 minute considering the time constraints. So these are the basically list: private visits, gifts, donations, if someone is going abroad on employment, for immigration, for maintenance of close relatives abroad, and any person dependent on him, going as a attendant to such person, such relatives. Then business trips, medical treatment, then facilities available for the students. So these are the list, wherein the government of India provides a liberalized remittance scheme, wherein a limit of up to rupees 2 lakh, up to USD 2,50,000 per financial year is there uh, for various permitted current as well as capital account transactions. So one should certainly go through this liberalized remittance scheme also, wherein one can take the use of these provisions and send the money from India to outside India for these particular purposes by NRI, and the uh, even the person who is resident in India can utilize this LRS scheme.
Yeah, Bhupinder ji, it is only for residents actually.
Yeah,
LRS is for residents.
Yes, it is for residents. And,
only for residents. Only for residents.
Money can be sent outside India.
Yeah.
Yeah. So these are the certain provisions I thought I should discuss within the limited time, and I have tried to be very crisp as well as narrate whatever was required for the purpose of understanding of the listeners, of the participants. So thanks, Vivek. Now over to you, and we can have the Q&A session also on this particular topic. Thanks, Vivek.
Thank you, Bhupender ji. To brief our session, I'll quote the words from one of our member only, if you can see in the chat box, from Joseph Thomas. Very succinct, short, beautiful presentation.
Thanks. Thanks.
Though personally, I used to constantly think that as a chartered accountant, I am already aware about all the regulatory developments which impacts myself as NRI. But after this session, what I felt is nothing but a sense of gratitude to both of our speakers to take our members through the advancements in regulatory landscapes with such difficult provisions in such an easy manner. To make it even more simple, as our speakers concurred, we'll be now delighted to take a few questions on the sessions conducted. If I have the permissions from both the speakers, shall I move forward?
Yeah.
Yes.
Thank you. First question is from Tejwani ji. Is there any relaxation in resident rules under the Income Tax Act as a special case during the Corona financial year 2020-21?
Yes. In case somebody is quarantined in India from 1st of March, so 1st of March to 31st March would not be counted for calculating the period of 120 days or 182 days, as the case may be. And for the persons who are in India, but because of flights not being available, 22nd March to 31st March, so these 10 days would not be counted for the purposes of calculation of 120 or 182 days.
Thank you. Second question, it's from Bhupender ji and Tejwani ji, both of you, who are coming under the category of a specified relative in case of gift by a resident to NRI.
Yeah, Bhupender, I'll just cover it from income tax, maybe from Companies Act, you can talk about it. So income tax, there is a special provision called Section 2, subsection 41, which defines relative as in relation to an individual, it means the husband, wife, brother or sister, or their lineal ascendants or descendants, which means mother, father, husband, wife, brother, sister's spouse as well. So this is what relative is, and Bhupinder ji can give a detailed note on relative as per the Companies Act.
In fact, Companies Act section 277 is there related to relatives, and under section 277 again, parents, spouse, and the member of HUF, husband and wife, they are basically covered.
Thank you.
And then there is a list of certain prescribed members So I think they are dependent persons who are ascendant as well as the descendant of that particular family. So that has been prescribed in the law under 277 of the Act.
Thank you. One more question is there. It has been mentioned during the session, if a property bought from NRI account, that is amount transferred from a foreign country by an NRI, is sold say after 7 years, capital gains will be paid at the rate of 10%. There's a scheme for investing the sales proceed in few central government infrastructural bond to avoid any capital gains tax whatsoever. Is that scheme available for NRIs?
Absolutely. What Bhupinderji mentioned, we need the foreign exchange to be retained in India. So we are allowed to buy a property, bonds, as per various sections of the Income Tax Act. And this is also allowed by FEMA, as Bhupinderji mentioned.
Yes. Under section 54 EC, there are certain bonds where you can use it.
54, 54F, 54 EC. So definitely you can save the taxes.
Thank you. Due to paucity of time, I'll just limit my questions to last one. This is specifically from Tejwani ji. Tejwani ji, Suresh Nambayar has shared his compliments for the nice presentation, first of all. Now he has asked, in the income limit of over 15 lakhs per annum, would capital gains on sale of immovable property also be included, or would it be restricted to income items like rental income, interest on
it will be included. So total income. It is total income, including capital gains, other sources, salary, house property, everything.
So with that, may I request from both of our speakers to conclude the Q&A session?
Thank you, and thanking everyone for wonderful participation.
Yeah, thanks Vivek. Thanks Vivek and the Bahrain chapter for this opportunity. And we are thankful to Chairman Azizi also for giving this particular opportunity.
Thank you so much, sir. Actually, I'm just beginning to realize maybe we've allotted shorter time for you. Such an interesting topic. I already see a lot of interest from the members, but maybe for another day. But thank you so much. I think quite an interesting presentation which you have tried to compress into such a short period to keep with the time. Thank you, both of you, actually.
Yes, sir. Thanks a lot, sir. So can we leave from the session? I think, yeah.
Yes, sir.
Sure, sir. Sure, sir.
Okay. Thank you. Thank you very much.
Thank you so much. Thank you so much. Thank you. Now, as I said earlier, good comes to those who wait. An investment in knowledge pays the best interest. And since we talked about investments, we surely have invested in knowledge during these last 3 hours. So about that, let's have a quiz, Kahoot quiz, the most awaited session of BCICI events. So may I share my screen so that you can all join and see who gets to get the prize today. For the information of our members, the quiz has been prepared solely by the host and the chairman himself. So all the executive committee members are eligible for the quiz and they can participate. Sorry, Ajay.
I will never participate when you are the quiz master, Vivek. But good show, Vivek. Well done.
Thank you, Ajay.
So I think members are already familiar with the format, so we are not had to tell. So membership number and first name. So this is the format.
I can see the numbers increasing in just a flip of, it's a flip of a coin. It's increasing continuously, one after another.
Yeah. So all Bahrain members are eligible to participate. So good luck.
I can see the numbers stuck at 28. Other people are not interested to get the prizes. I have started the timer. We'll start the quiz in next 2 minutes. Please make sure you add your membership number, otherwise you will not be eligible to get the prizes. I can see a couple of names without the membership number. They can drop and rejoin if they want. Exactly after 100 seconds, we'll begin our quiz. Ajay, may I request you to declare again the price for the quiz?
That's the usual price, Vivek. The commitment points, which is 4,000 for the first, 2,500 second, 1,500 for third, and 2 consolation prizes of 1,000 each for fourth and fifth.
Thank you. I wish
we can start, I think. Yeah.
Yes, I think we can start.
Yeah.
Thank you everyone for the patience. Now let's start. So here goes the quiz. Future. API stands for yes. The scoreboard is led by Sanjeev. And moving forward to next question. Time's up. Only 3 people got it right. That's interesting question. Okay, the scoreboard is changed. Santosh, our vice chairman, is leading the board now. One answer is remaining. I think 30 participants we have. Yes, that's all. Moving forward to next question. The top positions remain same with Gaurav coming into 5th position. Now the last question.
Just
Fourth
read out the
question
question
is,
also.
Yes, Ajay, sure. Non-resident need not to file Indian ITR return if there is only
So Vivek has been involved in the CA exams recently. So don't mind if the questions look tricky.
Santosh is diligently making a top position. Next question, prior RBI approval is required in case of transfer of share from non-resident to resident by way of gift. Is it true or not? The catch here is prior RBI approval. See how many people get it right. 8. The score position has changed. Next question. Omni-channel does not focuses on interaction and relationship management. Is it true or false? $10. 5 seconds to go to ask 2 persons to answer. That's all. Let's see the scoreboard. The scoreboard has entirely changed. Moving on to next question. What type of investment on non-repatriation basis is prohibited for NRI or OCI? Eleven answers. Raymond is on fire. Next question. Is it true or false? There is no need FDI linked performance conditions for investments in LLP. The ratio remains at 50. Next question. In ESG asset management model, what does ESG stands for? Right answers. Way to go. 10th question after 16. Investment income will be taxable at 20% in hands of non-resident for investment in debentures of Indian Private Limited Company. I'm expecting to see a higher ratio for the correct answers. Apparently, it's not.
This is CA exam, Vivek. You have kept very high, very low pass percentage.
Ajay, this is expected out of us, right? 7 key ethical principles European guidelines for a trustworthy AI does not include. So no one goes with transparency, it seems like. Top position is still being maintained. Next question. Which of the following was not presented as potential future scenarios in near to medium term by Mr. Satya? There, if you remember, 5 scenarios have been shared. So which was not presented as potential future scenarios? Three right answers. The top 3 positions are being held by the same persons. And we are on the 13th question of the quiz. Bank ABC's AI-powered first digital employee, the world's first digital DNA. The name of the person is human, is named as Fatima. Yes. Consistency I can see in the scoreboard. Which country's central bank was subject to hacking and a cyber heist? Five seconds to go. Nah. Moving on to our 15th question, second last question. Which past president of ICAI was shown speaking about the mentor of the month of CA Sridhar Sitapati? I'm sure most of you must be knowing the answer.
Yeah, this is my question. People who have watched the Mentor of the Month interview.
Definitely, Ajay. People have seen you at least. You're really. Interestingly, Ajay, we have 9 right answers only here.
So that shows most of the people have not watched the Mentor of the Month. So should we deduct points who answer negative in this?
Okay, Ajay, I'll mark this question as. See, Gaurav has just, with this question, Gaurav came on the second position and Santosh on third. Now the double point question, ICI Bahrain theme for the month of January is.
I'm sure it is Go Corona Go.
Go Corona Go.
बोल 20 right answers. So no one opted for Go Corona Go.
I opted, but I'm not in the race.
So let's see the scoreboard. Santosh, yes, you are eligible, so I won't take the prize away from you. Raymond is on second, and first position goes to. Let's see the name, Gaurav. With that, I stop sharing my screen, and the runner-up positions will be duly getting their prizes as well. Now, with that, we come to end of our session, and I would like to express my gratitude to all of us for staying with us and getting through this beautiful session conducted. I so wish we could be together in the same room because the collective wisdom, passion which we share today, the reach of this session would raise any roof. Together, we are creating new ways to drive and sustain through these technical glitches and virtual sessions. In spite of these technical glitches, I'm really pleased to see that together we successfully conducted today's event, all thanks to the dedication of our beloved members. And I express my gratitude to all the speakers, all the 4 speakers, who, in spite of number of limitations, managed to end the seminar in well time. With that, I just hand over the control to Ajay in case if he wants to pass any closing remarks, and we can conclude our session.
No closing, nothing much. I just conducted a private survey as the session was going, so to see whether who should be conducting future MC positions. So I think everybody has said Vivek should be the MC going forward for all the events. So
thank you, Ajay.
Very well done. So thank you for all the people who connected. I think I also wanted to thank Mr. Abraham Jacob who connected us with the first speaker, Mr. Satya. And of course, Prashant is a well-known figure in Bahrain. And also thanks to Vivek for connecting to us to the speakers from India for the changes to the amendments and other things. And thanks also to the backend support from the other XCOM members as well. So thank you for your patient staying on, and have a good evening, and looking forward to the working week. So bye-bye and good night.
Thank you. Thank you, everyone. We can continue.